let's get down to business, start talking about our inflation number. We saw the CBN forecasting that June inflation would be around 14.5%. We've seen inflation since then hovering at around 12.9 and 12.7%. Now, looking at the month-on-month change, it is up about 1.15%, the highest it's been since January. Of course, January we saw it around 3% due to the removal of the subsidy. What are your thoughts on these numbers?
Well, I think the numbers aren't bad. We have to single out the electricity price tariff. The electricity tariff was increased in June, and you can see that in the component of the index, which is electricity, housing and fuels. This component went up 20.5% year on year in June, but the component is only 17% of the index. So you have to mention electricity. Also, very briefly, you have to mention imported food costs, which are now separately shown in the index there, and imported food costs rising 18% year on year. But overall, I think the authorities will be happy. This figure of 14.5%, that was the peak. That was the forecast for the peak, and I think they expect the peak to come out in July data. And this is plausible because the base effects in July aren't very helpful, so you'd normally expect a pickup in the month of July. Whether it reaches 14.5, I'm not quite sure, because you know, this aggressive tightening which the MPC in Nigeria embarked upon in late 2010, all of 2011, I think is going to bring its rewards now.
Well, Gregory, like you said, this number is due to higher electricity and farming costs. But looking at the trend in core inflation, which of course is non-food inflation, we saw it go up to 15%. However, looking at the month-on-month figures, it was up by 1%, despite the fact that we had a hike in electricity tariffs this past month. Did you expect a higher impact with the electricity tariff increase?
Not hugely, because remember, for the increased electricity tariff, there are exemptions in the increase for low income consumers, and so I mean that's a point to bear in mind. And also, it's not that large part of the index, so yes, we expected some impact from this, and this has come through in the as you say, the increase in the headline to 12.9. For the core inflation measure, I think overall, again, I think the authorities will be quite satisfied here. And, as I say, reflection on the aggressive monetary tightening which we saw last year. Now, of course, looking forward, the point really is how quickly will the rate come down? Well, I think not that quickly, because of all the rigidities and inefficiencies in the structure of the economy. So, this is one reason why Nigeria has 12.9% in inflation, and South Africa has less than 6%, because of these rigidities and inefficiencies.
But Gregory, I want to talk about the effects on our markets, the effects of this number on our markets. Now, traders say that we already saw yields rising as investors expected high inflation numbers for June. How do you see the market responding to this 12.9% number?
Well, I think the consensus among the analysts on the wire services was probably 12.8, 12.9. So I'd expect most investors would have followed that consensus. As point about where the yields are going, and the other point, of course, is where's the policy rate going? Where the yields are going, well, I think flattish probably, because one reason for that is the still large issuance program of the federal government of Nigeria in the FBN bond market.
Well, what about our foreign investors, Gregory, in terms of how this slight rise in inflation will impact how offshore investors will play our markets going forward? Analysts are saying that we're beginning to see them return to our markets, of course, easing by monetary authorities in China and Europe, and of course, sort of hints towards easing in the US has helped create some sort of hot money. And analysts do feel that this is going to help them sort of come back into our markets. But at the same time, they also see inflation remaining high for the rest of the year. So how are we going to see this impacting offshore investors and how they're going to be playing Nigeria's markets?
Well, I think a lot of offshore investors like this market, and the auctions, more in T-bills than in FGN bonds, the auctions and secondary trade the last few sessions suggest the offshore investor is coming back to Nigeria now. And the explanation of that is that they're enjoying yields of, depending on the instrument, between 14 and 17%, and they aren't going to get those yields many other places. Now, of course, for the investor to make this move, they have to feel fairly comfortable on the exchange rate, right? And probably in this respect, the fact that the oil price has come back up, the Nigerian oil price, I should say, has come back up. It went down to about $90 now. We're just over 100 now. So probably this is giving that reassurance to those offshore investors who are coming back into the Nigerian debt market. And for the rest of the year, yeah, I mean, inflation the rest of the year is going to remain double digits, and provided that these investors are comfortable with where they see the Naira exchange rate going, I'd expect them to keep quite substantial exposure, especially on the T-bills in Nigeria.
Well, Gregory, like you mentioned, the CBN certainly will be happy with this figure. In terms of moves we expect from the CBN, our MPC meeting is actually coming up next week. What are your thoughts on whether we will see any tightening with this inflation number?
Well, it's a possibility, but personally, I don't see it. I mean, the last MPC in May, no change, of course. The previous one, no change, with some suggestion of easing. Now, I think this time round, next week, I'd expect no change again. And the reason for that is that the focus of the MPC CBN has become inflation, and they, until they're comfortable with the in-house projections for inflation going forward, and of course the impact dating back to the fuel price rise, I think they're going to keep the policy rate unchanged at 12%. There's a subsidiary argument on the growth side. Now, some people might say, well, of course, growth in first quarter was 6.2%, lowest to 3 years. Isn't that a reason to act? Of course, act in this case would be to ease. But I don't think that's I think that's unlikely, because as the MPC says itself, the sectors which suffered the slowdown in growth Q1 were agriculture and oil and gas, and monetary policy has very little impact on their internal growth dynamics. So in short, I think no change, and no change until, well, perhaps towards the end of the year, if the MPC is more comfortable with inflation prospects domestically, and if the global environment is more settled, then perhaps some gentle easing. Otherwise, no change to the end of the year is our view.
Well, thank you so much, Gregory, for giving us your take there. You think that the CBN will keep rates unchanged. That was Gregory Kronsten, head of macro and fixed income research at FBN Capital.